Welcome to another episode of The Warehouse Floor, Conversations with the Industrial Property Team. I'm Matt Osowski, SIOR. And today I'm here with Rick Smith of Leavitt Insurance Group, and we're going to be talking about commercial insurance for industrial occupiers. So a lot of our business users are focused on rent, dock doors, and location, and unfortunately, insurance becomes an issue after the signing sometimes. So today, I'm here with Rick to tell us about what some of those gaps might be and how to avoid some of those surprises. Rick, thanks for joining us. Appreciate you being here. Why don't you tell us a little bit more about yourself? Tell us about the commercial insurance world a little bit. Tell us about Leavitt Group and what type of clients are you guys seeing?
Yeah. I say everyone this, when I was a kid, I wanted to be a secret agent. I got the agent part right, but I landed in insurance. Yeah, that's right. So I'm second generation. So, I had the benefit and privilege of working with my father for many years. And Leavitt, we're a nationally independent brokerage retail insurance firm, a full service. So we do property casualty side, benefits side, employee benefits, and personal lines and anything in between. I am focused on the commercial business. Client-wise, I have a lot of, call it industrial clients in a couple different verticals, large specialty in real estate, anything of that. So the management of it, the investors, the development of it, the construction of it, anything in the realm of building, managing, or investing in a building. Mm-hmm. And then on the other side, a lot of manufacturing. We call it product life cycle. So the making of it, the distribution of it, the wholesaling of it, even in terms of the retail sale of it, if it was a bit more B2C flow there. So,
kind of supply chain from start to finish.
Yeah.
Well, you're perfect to have on the show today. We deal with primarily industrial occupiers, and that sounds like those are your clients. What's your role at Leavitt?
I'm a straight up insurance advisor. I'm the advisory side of our practice. We have a big captive practice, which is where we actually help companies, if they qualify, found their own micro reinsurance company.
Okay.
If you're big enough, you can do that. You can start to self-insure a little bit. But in terms of my clientele, it's straight on advisory, finding the right policies. More over and above that, I consult on contracts like leases and things like that.
Okay.
I'm not a lawyer, but I can point certain things out in the insurance recommendations on maybe what can and cannot be secured in the insurance market. But all intents and above, where we handle anything related to insurance and risk management.
Okay. We'll get into the leases here in a minute. So we'll jump into it now. The lease blind spots, what do tenants typically miss in the insurance section? And, what are the key risks, like the coverage limits? For the longest time, we were seeing 500 million, and now it's like 1-2. We're seeing some higher requirements. Truth be told, they're going up. We're starting to see landlords, raising those. Tell us kind of what you're seeing out there and what that actually means.
Yeah, and requirements are never not going to increase. Insurance limits $1 million just doesn't go as far.
Right.
Where I think people will get especially from a lessor and a lessee, where they maybe don't understand is if you're leasing a space and if you're the tenant, the lease can hold you to obligations that further outweigh your insurance. And I find that if somebody is just quick to try to find something, if they're leasing a certain warehouse and they need a $5 million umbrella, sure, you can go out and try to get one.
Yeah.
But the problem I find is it the right one? I'll give you an example. An insurance requirement from a lessor's perspective, they want what's called fire, legal liability, or damage to premises rented. They want coverage they want the tenant renting the space the occupier to have coverage if they are negligent in a way of damaging the property. The misunderstanding is they as in the lessor thinks that's, hey, anything that they're negligent for, I can go after. It's not. It's actually, the base coverage is fire only. And so, for example, if your policy is the tenant is a fire only legal liability section for damage to premises rented, if you cause a fire, their coverage could apply. But if you cause an issue with water, there is no coverage for that. So, and it's legal liability, meaning negligence has to be proven. The reason why I see a lot of real estate investors say, hey, we don't carry this risk. We're triple netting the lease and all this stuff. And in reality, there still is a lot of risk there. And I think that's overlooked in the way that the lease can be structured to make sure that the tenants are compliant in that. And also on the other side, if you're the tenant, making sure that hey, yeah, I have my insurance policy, but by the way, here's 2 points where this lease is going to, surpass what my insurance is. So for example, if they're not legally liable for the loss, let's say they didn't know something they were doing and it just caught fire, and the court strikes it down to them not being legally liable and they weren't negligent, you can still...
Propane tank blows up on the back of the forklift.
Correct. And let's say they weren't negligent, meaning it's proven, documented that they were not negligent. If the lease requires them to be responsible for that, your insurance isn't going to pay for that. It's not as straightforward as people think it is.
Definitely not.
Yeah.
As far as those figures, I mean, are you still seeing like 1-2 million? It's kind of still
limit wise depends. I would say the heavier warehouses, I'm starting to see more frequency of 5 million.
Yeah.
3 is probably about where everyone lands.
Yeah.
For the retail stuff, and depending on how big the investor is, the investor or property group, I mean, 1 million still is fine. But the bigger you get, the bigger buildings and the bigger type of businesses that they can have, especially if they're manufacturing, tooling, the higher limits that are going to be required.
Let's talk about the market, insurance market. Sure. Premiums are, as we already talked, premiums are going up. I've had pretty much every one of my clients tell me that 20, 30% or more. What's driving the increases right now? And like you said, it's never ending. Everything is going up. But, what specifically do you think is driving those increases? And, is industrial a category where you're seeing even greater increases because of some of those things we talked about?
Yeah. What's driving them? So my answer to this year is actually premiums are pretty flat on the property side. Mm-hmm. So that's positive. As of 2023, 2024, no, it was ridiculous.
For sure.
And that's where people are still maybe got some PTSD because they were seeing these 30, 50, 100% increases, Your question on the type, frame construction is the highest risk. If you were a frame, especially residential apartment that was built in like the 80s, your insurance pretty much doubled or quadrupled. If you own a large manufacturing facility that's maybe 100,000 square feet or something like that, and it's superior construction, you felt it. And maybe underwriting got a little tighter, but you didn't see the increases relative to what stick-built stuff did.
For sure.
Now, what drove it, I should say? Well, you had this perfect storm, which, at least in my tenure, plus my dad's tenure of what I've heard, maybe only happened once. But what happened was the following. Number one, COVID disrupted the building material and labor costs of the reconstruction of buildings. So what was an insurance, especially lender-driven, replacement cost is what is it going to cost to rebuild this thing from scratch?
Yeah.
Okay. But what was $5 million essentially is now 10. Because of the cost of materials. Now I know that this year too is also
it's
flattened, but the cost of labor as well. That gets taken into data points that insurance companies use to find the valuations of replacement. So are you paying more? Yes. Is the rate higher? That's the difference. There's 2 things you got to look at. You have to look at the replacement cost and the rate. What happened in 2023, the rates went wild. And the reason why is reinsurance. So there's 3 marketplaces in insurance, okay? There's the retail market, there's the wholesale market, and there's the reinsurance market. Retail and wholesale are something that your clients would buy.
Right.
Reinsurance is what insurance companies buy. Reinsurance, if I'm insurance company A and you're a reinsurer, what happens is, even if I'm financially stout, like one of the big ones you could think of, like Travelers, okay? Would be very painful for me to suffer a massive loss.
So you're insured.
Correct. All of my policyholders in any one event or over the course of the year. I know that based off my reserves, my cash flow, the premiums, everything, I can pay out in any one loss from a weather event or something like that. Let's say it's $100 billion. That sounds high, but let's just say it's that. And then over the course of the year, let's say it's still that $100 billion. What I'll do is I'll say, okay, I need to buy insurance on top of that in case I surpass that, because theoretically my financial strength says that I'm larger than that. And it's true, they just can't sustain that loss at one time. So I'll come to you and I say, hey, here's the deal. I need 900 billion excess 100 billion. So I get $1 trillion.
Yeah.
Okay, great. Now we work out a deal where when the premium is paid by the client, a certain percentage is going to go to you.
Right.
Okay. And then I'm going to keep the rest. And as far as the operation goes, reinsurance went nuts. and it drove the prices crazy. So if you think about an insurance company, they're taking risks. The more reinsurance they have, the bigger risks they can take.
Yeah.
When your reinsurance increases 100% and the deductible increases 100%, and it's take it or leave it because the reinsurance market is not very big. I mean, what do? You have to raise your rates, you have to do different things. So you have that going on. You have building labor costs, you have reinsurance. And the last thing is you have the unflexibility of the insurance market. So every insurance company that is a standard company, which are the names you think of, okay? There's another marketplace called the wholesale market, which are names you don't think of. Actually, maybe Lloyd's of London would be a good example of that. Not the Lloyd's of Londons, the Nationwides, the Travelers, the auto owners, all those guys. They have to file certain aspect. It's a heavily regulated industry, so they have to file what they're going to do.
Yeah.
So they have to file their rates, and typically what happens is those rates don't get approved for 12 months. They just sit there. It just takes takes a while, right? So you have to file your rates. So for example, if your rate is filed to 5, you can't legally just charge 10. You have to file the rate, get it approved for 10.
Okay. And that process is...
Correct. So if you're faced with keeping this risk on at a discount for the market because you need 10, based actuarial data says that you need 10, what happens? Well, a lot of insurance companies said, we got to non-renew this. We can't offer a policy this next year. You got to go somewhere else. And so what happened was that put out, a lot of companies dealt with this, and that put out 4 times as many opportunities into the risk pool of brokers and underwriters trying to place business somewhere.
Yeah.
So when an underwriter saw 10 submissions a week for new business, now they saw 40.
Wow.
So, and like them, they're human, they have to prioritize their work. So you have the triple storm. And then you have interest rates, which insurance companies have to do mark to market on their balance sheet. Insurance companies invest mostly in bonds for cash flow purposes. And so you have all these 4 things that happen at once.
Yeah.
That's what happened. Okay. And so they felt it in the rates and people non-renewing because they couldn't file. And then where do you go? And if you're an older property, are you getting screwed? If you have a lot of losses, you're going high risk. So that's what happened.
Now, good news is it's flattened out. So
yes,
makes your life a little easier.
It does, but you see trends, and unfortunately, to a certain extent, the market is cyclical. So now everyone's hungry, and they're opening up. There's a lot of investment coming in, and they're aggressive, and they're driving down rates. Yeah. And it's like, if you do this for another couple of years, like, are you going to set us up for exactly what just happened, trying to go like this?
Yeah.
So
we live in a cyclical business as well.
Correct. Yeah. I mean, some people get it right. There's a couple companies I can point to that were pretty much like this the entire way.
That's a good answer. Let's dive back into industrial uses. We were talking before we started here. Our industrial occupiers are a little bit different than probably a lot of people. A lot of industries that are insured. You have forklifts, racking, trucks, sprinklers we'll jump into. So what are some of those exposures, and tell us some horror stories.
I see a lot of the time where, somebody leases a space and they're so excited, and then they get in there and they start to try to find insurance. And the problem is insurance companies are skittish when it comes with the sprinkler system. I get it. I do understand. The common stance that you'll find is that underwriters will be really picky and say, oh, hey, this space was never originally outfitted for this type of business.
Right. And
the sprinkler system is inadequate because of that. And sometimes if it actually is deemed inadequate and we can't find somebody that would be willing to do it, or maybe someone at a reasonable cost, you have to comply with the insurance requirements that are there, that are not forced upon you, but to get insurance you have to do X, Y, Z. One of them is change the sprinklers a lot of the time, and it's expensive, especially, you and I talked about this a little bit before, but I have a client that was forced to sprinkler their racks.
In racks.
Yeah, there, correct. In rack sprinkling, and which is expensive. It was very, very expensive. It was 4 times the cost of their insurance policy to do that.
So explain what the in rack actually means.
Yeah, so most people think of sprinklers like this building where you have them up here on the ceiling. Depending on the type of risk and the type of fire code and the insurance and everything, they might force you to literally run a pipe in the rack and have a sprinkler head in the rack. So if that rack, whatever material is there, catches on fire, if the sprinkler was right there. And that's very expensive. Yeah. And so complying with that can be a hardship if you can't find an insurance company that's willing to be okay with what you got.
So we talk a lot about sprinklers, and we're seeing some municipalities that are not allowing use occupiers to go over 12 feet if they don't have ESFR, emergency suppression fast response system. Have you seen, or any of your clients, have you seen anyone sign the lease, not have the ESFR, and say, okay, now I got to do, and then they're stuck with it?
I haven't seen that. I've had people sign the lease and then have to do other things that still cost them money, but I have not seen that one.
Okay.
I would like to say most of my clients are good about asking me first of like, hey, this is what we're doing, and getting my opinion on things. So I have not seen specifically that one, but I've seen others. Like others are for example, a central security alarm with keys. Hey, this place doesn't have it. This insurance company won't do this unless you actually get a full-blown security alarm system that you can, that notifies the police, and then you turn off with a key. Camera systems is a big one, things like that. Yeah.
Okay. All right, so let's talk, we talked about the use a little bit there. Let's talk about the building. Had a conversation with a client last week that was looking at a building. I said, man, I don't even know if I could get this thing insured because it's old, the location. So what are some cost drivers, like age, sprinklers, which we've gone over ad nauseum, condition? Have you been in these situations where client brings you a building, or they're going to sign this lease or buy the building, and you're just like, this isn't going to work?
Yeah, not necessarily isn't going to work, but I quickly inform them that they are not going to pay what they think they're going to pay.
Okay, let's talk about that.
There's three marketplaces in insurance. I talked about reinsurance. There's the standard market, which are the names you all know. And there's the high risk market, where the rates are essentially a lot higher premiums, less flexible coverage, less coverage in general. It still can happen though. For example, if you're going to insure a 10,000 square foot warehouse that's masonry combustible, if the standard market's going to throw out a premium of 15 grand, the high risk market's going to be 35, 40.
Okay.
So it still can happen.
Significantly more.
Yeah, it still can happen, but it's going to be way more than they think. The insurability of the property, there's a lot of factors, but you got to look at the roof, the safety, so fire suppression would be included in that, but the safe systems of the building. And then the electrical system, and just the overall condition of the building. For example, like if the masonry needs a little tuck pointing or something like that, those are easier things to sell if it's deficient there. The harder things are the sprinkler, building mechanicals, even if you have a boiler or HVAC or whatever it is. Those are the more meat things that would need attention. So I encourage everybody, if you're looking at a property to buy, know the answers to those things when you send it out to your insurance broker, just to understand, hey, am I looking at a standard market quote here, or is this going to go high risk? Because obviously that could reflect in the price you're going to buy it for.
Let's talk about business interruption. A scenario, when warehouse go down, revenue stops. What do we do? What's actually covered here?
Yeah, let me first tell you what business interruption is. It's misunderstood. So first off,
that's why you're here.
Yeah, 80% of people are underinsured on their business interruption, especially larger risks that can't get just the basis of full 12 months. So what is business interruption? Well, if something happens at your premises, whether you're the lessor or you're the occupier, and you can't operate your business anymore, the question is, what do you do? If you're a field type risk like a contractor, it's pretty easy to be nimble. If you're a manufacturer or you're using the space, it's incredibly difficult. Right. You could be out of business. So what it does is it pays normal operating expenses, including payroll, and to keep your business afloat for a certain amount of time, as well as extra expenses that you need to go do whatever you're going to do. I have clients, I'll give you a couple examples. I have a couple clients that do this, but one of them in particular, they have good relationships with their competition. And so what they would do, and they would told me this, and the way we structured their business interruption is if something happens to them, they would then start to subcontract everything over to this other facility to keep their product in the market.
Keep it moving.
The business interruption, it would pay the difference of that profit there, but it would pay for them to go lease another space, to go get that place back up and running, pay the current expenses that would continue at that, including the lease payment and all those things, depending on the lease. We structured it that way. I have another client that honestly would move. They didn't care. They want out. Something happened here. I want to go buy a new place. And so they have a realtor pretty much on call that if something did happen, they already know 2 or 3 other places of where they would buy it or lease. And they know the cost and they know everything. Now that's pretty extreme, but it's a heck of a comfort.
Yeah.
So why people are uninsured is people think a lot of the time that, oh, if something happens, even at a larger risk, I'm sure 6 months we could get back up and running.
Yeah.
The problem with that is you really have to think about the inputs of what data you're looking at. Because number one is your lease. I've seen leases that literally you can't do anything for 90 days. Mm-hmm. And don't get me wrong, I understand. Like the lessor wants to protect his property of the tenant there. So what they'll do is they'll throw in and say, hey, you have 90 days to let us figure out what we're going to do if something happens.
Right.
I disagree with that. The occupier wants 30. They should want 30 days. A medium is 60. First, you have the fire department to come in, and that's going to take longer than you think. Then you have 60 days of literally you can't do anything. Then you get to start of whatever you're going to do.
So you're sitting 90 days just sitting there with nothing.
Nothing. And then what you think might take 6 months takes a year.
Always.
And if you can get a full years of business interruption coverage, it's called actual loss sustained. That's the best in terms of like the base level. And then you can extend it beyond that. Depending on what you do, you need to think about that. A lot of the time, if you're larger, they won't do that, especially if you have a lot of revenue.
Yeah.
Once you get into the 10, 20, 30, 50 million of types of revenue, it's a set limit, and you better make sure that thing's right.
Yeah.
So
that was some terrific lease advice,
Yeah.
to be honest with you. So.
Oh, one more thing. In terms of the lessor, it's quite frankly, it's a lot more easy for them to just get the loss of rents. Because if the tenant is no longer paying rent because they can't operate their business, it's actually somewhat very easy, straightforward for that.
So it's going to be a win-win for both sides then.
Yeah, both need it. It's way easier on the lessor.
All right, we've gone over a lot here. So let's talk about before signing the lease, the tenants, under contract, when are you engaged? Should they, call you after they get this lease signed, or when are your clients usually reaching out to you to say, hey, Rick, like, I'm looking at doing this, how many times do they give you the lease and say, hey, provide me this insurance? And how many times are they being proactive and saying, hey, help me figure this out?
This is a classic, what do they do and what should they do?
Yep.
What do they do? I have good clients that talk to me about everything that they're going to do in terms of leases and spaces and other things.
Yeah.
And I am a true advisor to them. I have other people that I don't know if maybe we're new and it's a new relationship, or maybe that's just the way they operate. They just act and then come to me. Always before. If you're thinking about a new space, it's always valuable to talk. It's a simple email.
Yeah.
Send me the lease. Let's talk about it. Let's talk about what the space means. Let me interpret this for you. Let me look at the building. If you sign the lease and then come to me, it's not that you're out of luck. It's just we're going to be capped on what we have. If
the leverage is gone at that point.
Right. If you were deciding between A or B space and you chose A because it was the cheapest or whatever, and then you can't go back and remake that decision if I say something different. So you're not out of luck. You might be forced to do something you didn't expect.
Yeah. So, the advice would be like take insurance as it's a real cost that should be associated with your total cost of occupancy. And it's not going to be the same at building A as building B necessarily. So having you involved early in those discussions will really be able to set the table and compare apples to apples.
100%.
Does that make sense?
Yep.
Yeah. All right. Well, Rick, what I missed? Anything else? Any closing thoughts?
Great. Closing thoughts. Don't discount your insurance advisor. You can almost get like free advice.
Yeah.
We work for you. If we place a policy, we're going to advise for you. So a good one is not just placing policies. They're half financial person, half paralegal.
There you go.
I can't say I'm an attorney now. Half 1/3 paralegal and then an insurance advisor. So yeah.
Well, that's great. Definitely have your insurance advisor on your team. So appreciate the insights, and I think this is going to help our occupiers out there avoid some mistakes. What's the best way to get a hold of you?
Phone or email is the best way.
We'll get that?
Yeah, you can look me up. I'm here in Columbus. I work all over the country, just set here. But yeah, anyone that has questions and needs advice, let's chat.
Absolutely. Reach out to me. I'll connect you with Rick. So thanks again for everyone watching today. If we have any other topics or guests you want to hear from, let me know. And make sure you like us on YouTube and follow our LinkedIn newsletter. Remember, every deal is different, so stay informed.